That's profit.
Alright, ladies and gentlemen, I hope you had a wonderful day. I missed last night's watch list because I lost my voice and it's still gone.
Fucking Josh.
So this is your replacement today, but hopefully we can still cover a lot. Also, if you're wondering how I lost my voice, it is because I got to meet a lot of Chads over the weekend and it was too much fun and I couldn't stop talking, so I lost my voice. But as far as today, wow. This week was talking, so
Yo, it's the Chads. Is that Mr. Royke right here on the right? Hell yeah. Good to see the whole family doing well.
I lost my voice. But as far as today, wow. This week was supposed to be about the Fed minutes, earnings kickoff, and the CPI on Thursday. But what went down in Israel over the weekend took over
There we got
headlines and is now bringing global tensions and oil firmly back into the conversation. The problem with how markets reacted to all the drama is that there is still more to come. Simply, a war in Israel can become a problem for the stock market and the world, and we will find this out after we see how Israel responds and then the ensuing responses afterwards. This is kind of how Russia and Ukraine played out in the early days, if you remember.
I remember.
But don't confuse this with Russia and Ukraine, because this war has an even deeper history.
Tell him.
More than 50 years to the date, the Yom Kippur War in 1973 was around this exact time. Some people even call what happened in 1973 the Fourth Arab-Israeli War. Why does this all matter? Because this can pull the world further into picking sides, just like Russia and Ukraine, and at this stage. That could have even more disastrous effects with inflation and slower growth still lurking around the corner. So the point is, today was a black swan, we're just watching it develop, and for now, until we see oil or much bigger action from overseas, the markets are vulnerable to it all. But doesn't mean they will just collapse without a catalyst. Nonetheless, what happened today is something to watch out for. What that is the safety bid we saw on safe havens today. The dollar was up early on, but you saw it noticeably in gold, bonds, and the yen. The fear from the weekend caused these to get a bid, and even oil. Also, the bond market was closed today, so that could have led to a bid in bonds with only futures volume available for trading. AKA the Fed and banks weren't trading bonds today, only futures. So there's a lot more to go over on this situation, and I will wait till I get my full voice back. But I got a nice recap of the day for you and a couple of plays for you on this fine watch list, so like the video, see you on stream and run it, baby.
Walking to the couch, it's the 2020 last shit. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the last shit, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection.
That's Master Josh's intro. It's fire. Give him a check out if you like stock markets, general info, and you start ideas for it. I don't think we're gonna watch the whole video here, but just the related info so we can get a little bit more understanding of what's going on out there in the Middle East.
So right off the bat, let's start with the recap of the day. U.S. equities higher in Monday afternoon trading, near best levels after morning's risk-off weakness in the wake of the weekend's Israel attacks. Follows a mixed performance from major market indices last week.
That's the SPY on the top left.
Big tech mostly higher. Energy and defense stocks rallying amid geopolitical uncertainties, managed care, trucking, fertilizers, commodity chemicals, grocers, drug stores among the other outperformers. Airlines, auto suppliers, semis, larger cap banks, asset managers, building products, department stores, HBC some of the laggards. Treasury market closed for U.S. Columbus Day holiday. Dollar weaker on the major crosses. Gold finished up 1% on safe haven demand. Bitcoin futures down 1.3%. WTI crude settled up 4.3% amid geopolitical uncertainty and after a sharp 8.8% drop last week. Market watching evolving situation in the Middle East after the weekend's rocket attacks and Hamas-led incursions into Israel. More than 1,000 are dead and dozens of hostages are being held.
So that's actually my biggest question.
Incursions into Israel.
How does the oil trade come into play? Are the oil markets going to be affected by all this conflict out there in the Middle East? Maybe the oil prices are going to keep going up, like additional pressure for the price to rise up besides inflation, besides all the other stuff been happening over the last few 3 years. So that'll be an interesting development. Keep an eye out.
More than 1,000 are dead and
this chart here is showing oil. Oil was affected very recently. Look at the oil drop prices. Huge fluctuation there for a period of time. But it looks like there at the end it's been a bit of a jump up to about $86, $87 after being up at 95.3 cents.
Dozens of hostages are being held. State Department said 9 Americans killed but did not comment on any in Hamas custody. Israeli government calling up reservists and placing Gaza under siege. And on any in Hamas custody.
Well, it looks like
Israeli
the 1973 oil crisis.
Government calling up reservists and placing Gaza under siege. Cutting off utilities and transport ahead of what
Israel at war with Hamas after unprecedented attacks.
is expected to be a large-scale ground invasion, but while the situation is highly fluid and clearly volatile, longer-term market impact remains unclear.
Yeah, that's what we're here for.
Market has often shaken off geopolitical developments, but big concern here revolves around the potential for the conflict to spread, with a lot of open questions about the scope of Iranian involvement. While the market waits for more clarity, bullish-bearish argument continues to be negotiated, touching on the big recent yield backup, the prospects for ongoing treasury weakness, disinflationary trends, Q3 earnings forecasts, the health of the consumer, and oversold conditions. News flow fairly light elsewhere. Some Feds peak, with Dallas Fed's Logan saying continued restrictive financial conditions may be necessary, but adding higher term premium may limit need for further hikes. Fed Vice Chair Jefferson argued further tightening could be necessary, but also acknowledged risks of tightening too much. Weekend press commentary covered recent Treasury sell-off, questions on Treasury demand amid rising supply, concerns about consumer resiliency, the higher-for-longer rate backdrop, and what narrow market leadership may mean for the road ahead. Investors looking ahead to a busy market week, with September CPI the major event, but
Alright, there it is. Major for investors, if you're interested. Investors' next major event to watch out for is the CPI in November. Keep that in mind.
PPI and preliminary UMich consumer sentiment also on the calendar. September FOMC minutes also coming Wednesday.
Oh, that's big. September FOMC Wednesday. Or is that today?
And the Q3 earnings season kicks off on Friday, led by the big banks. So that's pretty much the breakdown. Bonds are still a concern, but we need to see the real opening tomorrow. Israel is an issue, but we don't know what will happen next, and that means volatility is creeping. Then, we have earnings and a bunch of data this week. With that being said now, I just want to run over the calendar for the week so you can see what is really good. Today was a nothing burger besides the weekend headlines, so we don't have to worry about that. As far as tomorrow though, you have 4 Fed speakers. Fed Bostic, Waller, Kashkari, and Daly. That will be all throughout the morning, and we will even get a bond auction and wholesale inventories.
A lot of Fed speakers this week.
That shouldn't matter too much, and I think where bond yields and the price of oil tomorrow will be more important. Getting into Wednesday though, you start off with more Fed speakers, but the real key will be PPI. You will also be getting the Fed minutes that same day and even some data overseas, but the PPI is the newest data and gets a fresh chance at moving bonds yields and the market. Then moving into Thursday, this is where all the action happens, because not only do we get the CPI, we also get the start of earnings. Delta, Domino's, Walgreens, and a few others are on Thursday, then bank earnings kick off Friday with JP Morgan and Wells Fargo. I will go over the CPI tomorrow and hopefully my voice is back, but for now, that is pretty much everything, and now we see how the headlines and bonds develop from here. But on that note, let US get into the plays. Right off the bat, since I am using this weird SAI.
That good enough. Thank you, Master Josh. Thanks for keeping us up to date with what the market is doing. If you don't know, this man has been doing this for years, and he's a pro at it. So if this sounds like your thing, go ahead and